Let's share this screen. We are looking at a FTSE 100 coming down. Now, let me see if I can bring that up. Here we go. Looking at FTSE 100 coming down. Now, hopefully, we're going to get a little pop to the upside before we need to get selling on this. That would be the best case scenario, because we definitely want to look for the selling opportunity. Now I've got a trade I need to manage, so I will do that as well. So what do I need? Okay, that should be okay. Right then, so we're looking at FTSE 100 coming down, and we are looking for an opportunity to sell. Now, the obvious place right now that we are looking to sell is just along this trend line up here. Let me just bring up the chat room as well. There we go. Hey, Paul P, how you doing, buddy? Thank you, Angel. Right, so we are looking for a pop to the upside, and then just look for signals that that this is exactly what's going to happen. The daily pivot, I don't think is going to get tested again, and it definitely looks like this morning that that the range that we've got to play with is around about 30 pips. It looks like it's between this trend line and the weekly pivot. So let's see where the midline is, and then we'll know what the one-to-one, maybe weekly pivot, possibly the monthly pivot, but let's go weekly pivot just to be a little bit more conservative. There's our midline. So anything below there, selling becomes less value. You know, we want to try and get at least a one-to-one on this, and we're not really looking for less than an even money trade. So don't mind selling below that point, but what I'd prefer is prices just to pop up to here somewhere. I'm just making sure that 15 up would be good. Yeah, the trend line would be great. The trend line would be great, and then what I'll try and do is potentially not put a stop on initially. I'll just put my kind of no leverage trade on, and I won't put a stop on just to see if just in case it pops a little bit higher. We've had some inflation data from the UK this morning, which also came out pretty hot. The United States yesterday was hot, so we've got inflation really picking up, which puts a lot of upward pressure on gold. And you guys are probably seeing gold definitely picking up some strength. And we'll have a look at gold in a moment. And we're seeing Ainsley later on today as well. So we'll have the opportunity to talk through gold with Ainsley, because we will need to find out really if there's any fundamentals that we should be paying attention to with the gold market. It might just be an inflation story. It might just be that we are keen on the gold market from here anyway. Ainsley definitely will be keen, and I doubt that we're going to get anything but an opinion to buy. So really, we want this upper level here. So we're probably looking at entering. So we're looking to sell, and we're looking to enter somewhere around about the 70-100 level. However, anything around about the 70-85, between 70-100 and 70-85 is fine. Anything below this, now it's below this line, it just decreases our opportunity. Now, it might be that the market goes a bit further, but remember, for this particular thing, I'm looking for first contact. So because I'm looking for first contact, I do want to come out at the weekly pivot. So I don't really want to get in any lower than that. So let's just see what we have. Let's see what the opportunity is here today. Markets are opening in around about 20 seconds. So sell around about there, and take profits. Take profit will be weekly pivot. Right. So I'm staying pretty hot with this now. And I will get in straight away if the market opens up. Right, what we got? Oh. Yeah, we do want to get in this, but we need a pop to the upside. I don't think we're going to get our opportunity, are we? Looking to me. Oh gosh. Yeah, I don't like to get in before the open, and because of that, that may well just put the opportunity a little bit beyond reach here. As I say, though, there we go. I'm just sorting out my the trade here. Okay, well, there's no big deal at this stage. Can't justify getting in here, but you know, a move back up again might well get us in. Market definitely looks weak, so if it comes back to 85, any move back into 85, I'm just going to sell it off. It could well go through this point without coming back. That's just something that I will accept. If you guys don't want to accept that, that's you know, that's your business, because I'm not trying to give you financial advice by any stretch. I'm just telling you what I'm doing and what my approach is. Now we'll have a quick look around and see what the overall messaging is here. 85, 87. You know what? I might even put a little order in here just so. Let's have a look at the overall messaging and see if that is likely. Doesn't look likely. It doesn't look likely. Let's just have a look. Problem is the market is now broken down this trend line, false, and it's moved there. There was an opportunity this morning at 2 a.m. UK. There is a head and shoulders pattern here, which looks like it has actually played out. So let's have a look at that. There's the range there on the shoulders there, and that is the measured move, and it brings you right to the weekly pivot. So it has played out. So a bounce might be okay. The only other thing that I could look at is what news might just be able to drag us back to the upside again. The fact that we're in July, I think, you know, one of the reasons that I'm quite keen to sell the FTSE is the fact that we're in July. We are looking at you know, potentially a weaker periods, you know, coming up. We haven't had the sell in May situation. Yes, we've had fluctuations, but we haven't had the sell in May situation. So I definitely want to try and get the short. The problem is now that I like to trade the open. You know, that's really, this trade is really about trading the open. It's about getting in early, getting your profit and getting done. Now this starts to become a different trade. So even though the messaging is still there, what I'm now looking at is a potential pullback. I don't mind trading a break. Don't have a problem with that at all. But as you saw, as we opened up, it actually broke under the midline straight away. Why can't I change my markets here? Hold on, there's something going on with this fusion, which means I'm probably not even going to get a trade on it. 1 second. Let me just see if I can figure out fusion here. Here we go. There we go. Yeah. So we're in a different phase now. So what I've now got to look for is a pullback. So the first one is just trading the open and just trading the sentiment, which is weak. The weekly pivot and monthly pivot that's area to target, but we're already there, and now either we go through that and we're going to have to miss the opportunity, or in kind of trade two, you know, trade two entry, and trade two entry is a pullback. Now, I don't care if I get a pullback in a bar or anything like that. I just want it to pull back to my level. Price is fine now here. So the 85 is okay. And the reason I think is okay is that the trend line is starting to get close enough to give us the opportunity to say that that's actually not too bad a price. I'd probably prefer just a little bit higher, so maybe 85, probably 90 would be my favored place. But that might have to go on the back burner for now. Okay. What we will look at is what is driving the market. And we'll also have a look at some of the other markets as well. We'll have a look at gold. We'll have a look at Bitcoin, which is in a lot of trouble at the minute. And I suspect, well, don't suspect. There may well be a situation with Bitcoin where it comes down to around about $20,000, and that looks to me like the opportunity to get into Bitcoin. That certainly doesn't look like an opportunity just yet. Let's have a look at some of these fundamental numbers and wait for the market and see if it will come back for us. While I've got my eyes off this, if someone else could have a good watch of the market and just make sure that we don't miss the opportunity if it arises, that would be fantastic. So what we got this morning is a load of CPI numbers that or inflation numbers that corroborate, if you like, and back up what we saw coming out of the United States yesterday. So overnight, the CPI numbers from the United States started to edge up even higher. And actually, when you look at it year on year, it's something like a 5% number. It's a huge jump in CPI data. So not looking too healthy if you are thinking about what's going on with the inflation possibly kind of getting to the point where the Fed would have to react sooner than they initially stated. So we're looking at a Fed in potential reaction mode relatively soon, possibly. But they're starting to build. It's not just now the Fed. So we've got CPIs coming in at 0.9, previous at 0.6. So that's a 0.3% rise from the previous month. Core CPI is coming in 0.2% higher as well. The balance sheet, so the federal budget balance, let's have a look at that. Negative 74.2, and this is where the issue was going to come in for a lot of these central banks. CPI is at 2.5% from the UK, so you can see it's just it is creeping higher. PPI actually a little bit lower, but the retail price also creeping a lot higher. So inflation is definitely the story right now. Possibly getting to the point where it's just a little bit concerning. But here's the issue with what's going on with the central banks. The central banks are in this situation where they are seeing these CPI numbers come out, seeing inflation starting to rise, and they are looking at potentially changing the dot plot. But on the other side of it, this is the dangerous aspect of it, and this is why they don't just go ahead and raise inflation already. Raise interest rates already. On the other side of it, what you've got is a government in all these countries, but particularly we're talking about the United States, and okay, we'll talk about the UK a bit as well. You've got a government which is 98%, I think it's around between 95 and 100% of debt to GDP in the United States. Now, one of the ways that they can control that debt is by inflating the debt away. So as inflation kind of picks up, they can as prices go higher, if you like, then in a way, you'd make the calculation that the debt can come down almost because just by default, their dollars are worth more in that particular sense. So what they don't want is too much control of inflation. They need it around about this kind of 2%. 2% is comfortable, and the higher it is to a point, it puts the government in a much better situation. So the central bank can't raise interest rates too high, otherwise the debt is paid back at a higher rate of interest from the government. So this is not an ideal scenario that we've really kind of got going on. They don't want inflation getting too far out of control. They just want it to hop a little bit, just edging forward. I think what we've seen in Europe is probably a more desirable situation. It's edging higher, but what we've seen from Europe is that the CPIs are or the inflation data is more like 1.9%. Now they want it at 2%. Christine Lagarde said yesterday, it's kind of 2% or nothing. That's our benchmark. So forget a situation where we're looking at 1.8% or 2.10, 2.1%. We're looking at 2%. So they won't do anything until we see that 2% data in Europe. But what we're seeing in the UK is 2.5%. What we're seeing in the US is 5.9%, and it's getting out of hand. It's getting a little bit out of hand. So now we need to hear what's going on. So what's happening today, which is possibly going to spook the market a little bit, is Fed Chair Powell. So we're looking at that really for 5 o'clock. Now that doesn't necessarily mean that we're going to stay in a range, but it's going to be possibly a looser range. We're unlikely to continue to break down. So when we look at the FTSE or the US markets, which we'll look at now, we are not going to anticipate a massive drop before Jerome Powell has spoken. Now, after he's spoken, there's every chance that we do see a big drop down or a pop to the upside, depends what he says. What do I need? This one. So where is that? Now we need to define where's the range. Where could this get to? And that might kind of make us a bit more comfortable about, because we're in trade 2 now. We're not in trade 1 anymore. We're not in this explosive move that we can take advantage of anymore. We're now in trade 2, and trade 2 is going to be more of a pick up a trend and hold on to it and do our thing that way. So let's start to kind of think about the levels and what's happening longer term on the FTSE and on these global markets. And on oil and all this kind of thing. We'll leave that one. Actually, there's no point in leaving that up because I'm going to analyze this in a clean chart. So the first thing to note is this, albeit scruffy, but there's this head and shoulders going on up here. So regardless of what we call it, there's a distribution pattern going on up here, and I'm not that keen on this this area over here. So let's see if we got something else that we can look at as a pattern. There's that, and maybe that. So that looks like a kind of a triangle of some sort, possibly the head and shoulders, but it is getting a bit scruffy. That's the cleanest lines I can draw that I can see. Let me just see if there's anything else here. All these wicks are kind of telling us that the emotion that's out there in the market and the lack of decision making that's really going on here. But notably, really what I'm saying here is that that there is support. That looks like quite a good horizontal level of support. And when we draw support, we'll probably find just a little bit more clarity. And if we change the pattern here, we might find a bit more clarity on closing prices. Let's see if that helps out at all. No, and probably no. This one might help us a little bit. That looks like a better line at the top. And what I can also see here is a level along here. And when you look at this, it kind of, what that says is the support here. So this is where the buyers are likely coming in, and I think they probably will. As I said, we haven't got the meeting out just yet, so there's every chance that we do get the support along that level, because it's where we are. I'll change this back again to the line chart, and you can see that that this was on a daily. That same line from here. This is the one here, and we've got these pivots here. So the chances are this supports at this level. Pretty good chance. Do we want a long? Probably not. Probably not. You could take the long here, but you are probably risking a little bit counter trend trading the hourly. So not ideal for me. But there is a long here. You know, this doesn't look like it's breaking down at this particular stage. But what this suggests is that we probably will get our opportunity to short this market, and that's what I'll try and do if I can. But there's every chance this does buy up at this particular point. But now we can start looking at other levels that we can aim for. If the monthly breaks down, if the monthly and weekly break down, we're really looking at this this area down here at 70.50, and then of course we'll be looking back at the lows again. As I say, the fact that we're in July suggests that we probably should be looking for downside. You know, there's enough going on here to say that there's enough going on here to say that that some profit taking is likely. You know, in the market, the profit taking is the most likely scenario. Let's have a look at the other messaging that we've got, and what we want to look at now is the other global markets, so the S&P, and then we want to start to look at what's going on with oil and what's going on probably quite specifically with gold as well, and the pound. So the pound CPI data came out. This looks like it is probably going to suffer against the dollar rather than anything else, but you can see that there's probably enough strength in the pound to suggest that CPI data is just giving it a little bit of a boost for the first period. But now let's have a look around about the other barometers. So oil first of all, and with oil, I'm really interested in oil, and the reason I'm interested in oil is because it does make up quite a big percentage of the FTSE 100. You know, we're looking at Royal Dutch Shell and we're looking at BP. Two behemoths in the FTSE 100. So oil's a really, really important gauge of how the FTSE is going to do with these cyclical stocks. And you can see that the oil is through this level. So the analysis here, the technical aspect of this is suggesting that there could be some further downside with oil. I'm not sure how vicious that is going to be. The market hasn't really. It doesn't seem that bothered about the inflation numbers at this stage, but it certainly looks like it could be further, a few further problems with that. Now I seem to have a visitor. I'm on the radio, little. You're gonna have a good day, sweet. No, this is my little helper, but she's not staying. We've got to go to school. No, it's not too off, but have a lovely day, sweet. Bye, darling. Not too off-putting today. I wouldn't want somebody wandering in while I was kind of in the midst of trading, but we're not really doing anything just yet, so we're okay. So we've got oil that looks a little bit weak. We have got gold that is where's gold? I think this is gold here. Gold continues to be supported here. Now, I think gold's really interesting because we've got these inflation numbers, and yet gold is not quite picking up in the way that I thought it would have done by now. But it does look pretty hot. The question is, where does gold become so hot that you've got to buy it? And when I started to look at this earlier on, I started to look along this line here, and it looks like the monthly pivot. The monthly pivot is at 1861, and that at this stage, I mean, we'd have to go straight up to that particular point to meet that monthly pivot. But 1861 looks like the price point. If it gets beyond there, I don't think you would you'd have to buy gold. You wouldn't have any choice but to buy gold at that particular point. So let's have a look at the other markets as well. So the NASDAQ, look at that indecision there, just not sure what to do. That tells us that we're waiting for Jerome Powell. And opportunities might just be a little bit thin on the ground to get some follow through until Jerome Powell. The S&P just easing down, but definitely negative yesterday. You know, the inflation numbers came out and the S&P really suffered. So, which interested me actually, because you know, when I started to look at those inflation numbers, I was looking and thinking, well, actually, you know, you'd think that the banks and those guys would probably start doing a bit better, but it's not the case. You know, people are definitely getting out and easing off positions when they're hearing this inflation data, because they're concerned about what the central bank are going to do, which again, you know, enforces the point that we've got to listen to the central bank before we do anything. So S&P is weak. I'm just making sure my other trade is okay here. Yeah, that looks all right. I'm just going to quickly go back to the FTSE, because I do actually have trades on my other account, and I need to see whether I need to come out just yet. Actually, that will be fine. Oh, there we go. There we go. Okay. All right, I can focus a bit better now. Okay, focus a bit better now. So I had trades that I was still holding on with a short the FTSE. Now I've closed those trades just for complete transparency. I've closed those trades because when I'm looking at this FTSE at the monthly pivot, I'm still not convinced. Now, I'm not saying it's not coming down, but I'm still not convinced that we're going to get too much lower than this point before Jerome Powell. It definitely looks a little bit weak, but you know, I'm looking across the board. I've got health stocks just easing off a little bit, down a whole 1%, which is I always think that's possibly quite telling because of the Delta strains and everything else that we've got going on. We've actually got energy stocks that are flat. Most stuff is flat, you know, and I'm also looking at some of the mining stocks as well that look a little bit weak. So the big guns out there are certainly, you know, are suggesting that easing to the downside with the FTSE is the most likely, because what I've got going on is the bigger stocks that are slightly higher, like BP and Shell, are only just a little bit higher, whereas the other ones are looking, you know, pretty negative. British American Tobacco down 1.3%, and when you start to see the bearish side, you know, on some of these stocks, just edging that little bit more than the bullish side, it does suggest that we're probably going to get lower prices. But I like to clean the slates, and you know, I don't care if it comes down from this point. What I care about is having a nice clean slate, keep a clear head. And then I'll come back again on it tomorrow. So and what I'm kind of like getting here is that yes, there should be some downside that's coming, but the thing that is forming my decision is some of the correlations as well. We've got a little bit of a problem out there with inflation, and we can see that the UK is starting to kind of have the same kind of almost the same data points as the US. It's not quite as bad, but having the same data points as the US. And when I just looked at that pound dollar, it was right on top of a potential resistance line, just here. If inflation picks up, but the Bank of England do nothing, that's going to be negative for the pound. You know, what we are, the assumption that we are making is that the Bank of England will do something. Now, their rhetoric has been relatively hawkish, relatively, you know, from a pretty low ebb. So there's every chance that the Bank of England do start to, you know, take some action and have some sort of reaction. But I'm not sure whether we can make a decision just because one inflation print has kind of happened on the pound. So I'm just a little bit uneasy. I'm a little bit uneasy about calling anything one way or the other just yet. And I'd like to, as I say, kind of keep a clear head here and keep the powder dry, and then see if we can make more decisions after the 5 o'clock announcement. Because there is this kind of other side of the balance all the time. As I said, that, you know, the government in these countries are not going to appreciate a situation where the Fed or a Bank of England or any central bank is raising interest rates before they can start kind of bringing in some tax receipts or or something that they need the balance. So it is a jigsaw that we're going to need to start to piece together. So what I will see, well, I mean, I'll throw it to you guys actually for now and say, is there anything that you guys are looking at, and what are your reasons for it? Because I feel like I've given you my reasons for looking at what we would with a FTSE, and definitely the selling opportunity may well be there at some point. And gold would be the other one that would be high on my list. But what else are you looking at? Now, there was another one that's that I did mention earlier in the week, which was the dollar Swissy. Now, I was looking at the dollar Swissy for a selling opportunity at the weekly pivot. The inflation data may well change that a little bit, but this is a head and shoulders pattern. So there is a technical pattern which appears now to be forming. This is again going to be to do with what does Jerome Powell say? It's probably there. That looks to me like the position for that left and right shoulder, which also gives us a measured move, which is going to be here, and it's going to be here, which leads us very, very nicely down to this price point here. So we've got a potential entry, we've got a pattern, we've got a potential target. So the target looks around about the 0.9040, something like that. The entry is going to be under the weekly pivot. I wouldn't want it before the weekly pivot was broken down. Looks like the daily pivot's on top of that as well. We've got a trend line from the lower end here. Now let's see what the trend line will look like at 5 o'clock UK. That is. That's 7 o'clock. It's going to be kind of low, isn't it? There is another one here. There is this one here as well. If there is a trade here, this would be the way that I would play it. I picked the dollar Swiss at the start of the week, so I'm going to stick with that. I'm going to say that the fundamentals suggested a dollar Swiss short, and kind of at the time it did. Jerome Powell might say something different, but if I'm looking at kind of everything else, COT data and seasonality and what the fundamentals suggest, they do suggest a dollar Swiss short. So let's just have a look at what that might look like. Jeff had a euro long, I think, against the dollar, and it's almost the same trade, almost. I probably want to see it come down, maybe bounce, probably along here, then pop up again. And then the trade would be taken somewhere around about here. So we are looking at the trend line. We're looking at the weekly pivot and the daily pivot there, and then a move to the downside. Take profit one would be here. Take profit two would have to be, you'd have to come out, you'd have to take something off the table at where you don't have to do anything, but I would have thought that coming out a bit more at the monthly pivot might be wise. And then the last one would be down at the trend line. And at that point, if I'm honest, I'd want to be out. I don't see really that much strength with the Swissy, so much strength as with the Swissy that it would suggest that we are going to be making a massive move. But I do think that there's potentially enough suggestion and enough data and sentiment that would bring us down. So we're looking at this point with the Swissy. Looks like around about, as I say, maybe the 0.930. The monthly pivot is 0.9 0.913, sorry, for the lower line, 0.9146, let's say the monthly pivot. You guys know where that is, and along the trend line at 0.9160. Stops probably best above this level here, because that's really where we saw the biggest explosive move to the upside. That's a really good question, Paul. So Paul's asking how we're going to take advantage of Powell's statement later on. So this is just the way that I'm thinking about the market. So my first thing is that I have got a statement which I think is a driver. Now, I don't know that for sure. Nobody does. But I suspect we have got a driver of the market later on. Now, if the driver is later on, then the suggestion to me is that we probably should be waiting a little bit. You know, we probably don't have too much in the way of follow through if anything's going to start. The only sort of caveat to that is there an assumption of what Powell's going to say? Now, I need to make the assumption about what Powell's got to say. And if we go back to yesterday, we saw some CPI data, we saw some inflation data, which was pretty hot. So I'm guessing that the first thing that people are going to anticipate is that he suggests that there could be, not will be, but there could be a changing of the potential of interest rate rises. Now, this is all assumption, and I've got to try and make this assumption. So what we're always trying to do, it doesn't matter whether we're looking at a daily time frame, a monthly time frame, a 3-year time frame, a yearly time frame, we're always trying to make an assumption of what is the central bank's next move. You know, that's what we're trying to ascertain. What are the central bank going to do next? So if we make the assumption that the central bank's next move will come from yesterday's inflation data, then it would suggest that he's going to say that there will be a discussion about changing interest rates sooner. Then we have to say, what will that do to the market? Then we have to ask, what will that do to the market? Well, the first thing it will probably do is strengthen the dollar. That drives gold lower. That drives the Swissy lower. That drives the euro lower. That drives the dollar up. Okay, now that at this stage does not meet my analysis of the dollar Swiss. So I can't trade that before the announcement. That's my thinking. You know, it's going to be difficult to trade this before the announcement. Now, I might have it completely wrong, but I've got to try and get an opinion. I've got to try and form an opinion, because if I don't, then when I go into a trade, then when the other thing happens, when what happens happens the way I would have thought it through, then I'm kicking myself. Now, when the other thing happens, and I've entered a trade, then I'm kicking myself, because I'm thinking, that was my analysis, and now it's gone against me. So what that's saying to me is that entering the dollar Swiss before the announcement is out, or before we get some more clarity, is dangerous. You know, that's what it's telling me. So so the two ways that I would look for it is, number one, what you could do is assume a range. Assume there's going to be a range. Assume there's going to be no breakout whatsoever. Now, if we assume there's going to be a range and no breakout whatsoever, I'm going to buy in the buy zone and I'm going to sell in the sell zone. And I just need to find some charts that are in buy zones and sell zones. Is the dollar Swiss in a buy zone? Yes, it is. It's short term, but it is in a buy zone. Where's the sell zone? Well, it's probably here. So that this one just wouldn't qualify. You know, we're just not safe enough. It could be up here. So if it starts to pick up to that point, then I may want to buy to sell. I don't know, but that's certainly looking a bit dangerous. What about gold? Well, gold is in a sell zone as well. We just have this bar here on the hourly, and it looks like the buy zone's down about here. So what I'm looking for is a technical reason to get into gold shorts. Now, I think gold is going long, and I've just said that I think the dollar Swiss is going short. But what I'm doing is I'm trying to play with the market, until that particular announcement comes out. Because you've asked me how do we trade the statement. The way I'm trading the statement is one of two ways. The first thing I'm doing is utilizing the statement to create a range before it's released, and trying to trade at the top of the range and at the bottom of the range. And then after that, I'm trying to make an assumption on what the statement might say. So if I can get in, let's say I can get in on the short side with gold, but I think there could be a chance that actually gold is going to go long. Then what I can do is try and get in short here at the sell zone, also put in a long at the buy zone, and then put the stops when it's in the mid zone. When it's in between the two, I can put stops on both and see which one takes off, and hope that I'm still in, by the time the announcement's out. Now that's quite advanced probably, and maybe a bit complicated, so you might not want to do that. But what you could do then instead is just find your range and just try and take a trade and get out. So if I was using gold as my possibility, my possible trade, then I'd probably be in by now. I probably would have got triggered in by this bar here. Stops at the highs there. Looks like around about $6, and the daily pivot's only down 4, so that doesn't look too attractive. That doesn't look too attractive either. It's going to be tricky. It's going to be tricky. Okay, so this is almost the hardest. I think that's it's almost kind of like getting a bit advanced. So the question then is, can we trade it after the event? And absolutely we can. So what I want to do now is kind of find setups, like we just saw with that dollar Swiss. What we saw with the dollar Swiss is a potential setup if it comes down and pops up again to the downside. Now, because this is still in a range, and we still, I like this one, with the fundamentals, then because it's still in a range, it's possible that this becomes a sell zone. The buy zone becomes a sell zone. So I can trade it lower, but I'd have to get stops out before the 5 o'clock time period, put stops at break even, and really hope it goes my way. Now, the only thing probably the thing that's going to get it to go my way is Jerome Powell coming out and saying, just don't panic, it's all fine. If he says nothing, then the chances are the dollar weakens again, stocks and everything else start to push to the upside again. There's no worries. That could happen. So we could utilize it that way. Now, the third and final way that we could do it is wait for the actual speech. Now, see if we can understand what that speech is going to do to the market, and look for setups that suggest what the speech has given us. Now, we're only looking. All I'd be doing is looking at potentially 2 different types of sentiment. I'd be looking at him saying, firstly, we're going to have to think about possibly raising interest rates a bit sooner, tapering a bit sooner. Something hawkish. If he says that, I'd want to look for setups long dollar, maybe short gold, something like that. If he comes out and says there's nothing to see here, then I'd want to be shorting the dollar, but I've still got to find the setups. So that would give you in a way a basket of tools to be able to trade this from here on in. There's no doubt the safest way would be to wait for the speech, but what you might be at risk of then happening is not being able to get into a trade. So it's going to depend a little bit on your appetite to trade today. But I am going to say to you, be very, very careful. You look at what's going on here. Not really a whole bunch of movement. In actual fact, if we just go around the grounds, dollar Swiss. Now we're looking at dollar Swiss. Ever since the UK market opened up, we could change this to an hourly, but I don't know if it'd be any clearer necessarily. Yeah, let's have a look. Let's have a look at some of the hourlies. Hourly. I mean, there's not a lot in there. Aussie yen is the absolute reverse, so that looks quite positive. Aussie CAD hasn't really moved. I mean, I'm not going to go through all this. Let's just check it all against the dollar. Pound is edging to the upside. The Aussie hasn't really moved against the dollar. The euro actually edging to the upside as well. Gold looks like it's edging a little bit higher too. And silver looks like it's edging higher. Is that against the edging higher too? But there's not a great deal, so you've got to be really careful. My point is volatility is low, and I can gauge this volatility just by adding an indicator here. Let's have a look at the volatility, and I'm just going to look for the ATR. And let's do it over let's do it over, yeah, that's okay actually. Let's go with that. But look at really where we are. And if you zoom in here, you can see that the volatility is, yeah, and it's kind of in the lower range. You know, there's very little volatility as we kind of pick up. Now, this isn't always the case when we open up a market, but it does look like it's not only around about that mid range, but it looks like it might even be dropping down as well with silver. It doesn't look too bad with gold actually. This is the pound. Again, it's dropping just a little bit. This is where it becomes kind of a bit clearer when you really zoom out, and you can see that it's in that lower band. The Aussie doesn't look too bad. Now this can help for later. You know, if you're kind of looking at now the Kiwi had some news and data out as well, but if this can help you for later on, because what you're really looking for, if you're looking to trade the dollar, you'd be much better off looking for something that had already been volatile, because the volatility is likely to continue. So Kiwi dollar is a really good example of something which has got nice volatility. You know, it's been picking up. It's in this upper range. So if the dollar's to strengthen, the Kiwi looks like an obvious candidate to short, because at least it's in the upper range. So you've got a bit more time possibly after that speech is made to try and get in to something. So have a look at that. You can use the average true range. It's not you know it's a bit coarse as an indicator, but it can be utilized. You can use the ATR to give you an idea of what the volatility is. So you're probably looking at something with high ATR going into the speech on the hourlies. And at least then, as I say, if the dollar starts to turn around to be positive, then you can look at something that's got a high ATR that's been ranging higher to try and short it against. Otherwise, then you're kind of back to going, if dollar's going to be weak, my personal take would be, let's look at gold. And it's obvious, gold's an obvious one. And the reason gold's the most obvious is that we hear all the time, gold is the inflation hedge, right? We're always looking at gold as a potential hedge against inflation. So if that's the case, we should be looking at gold because inflation is starting to get in the upper band. The thing that's going to drive gold lower is a stronger dollar. If the dollar doesn't get any strength, gold is the perfect candidate to go long, and probably the Swissy. Maybe I'm biased, but you know, gold and the Swissy would be my favored. Now, if the dollar is going to strengthen, what's going to be the best opportunity to go short? Probably the ones that have had the high volatility going into the speech. You know, the likes of the Kiwi or I think we saw the Aussie. So look for the ones that have got the high volatility and they've managed to push to the upside against the dollar to give you some room to decide. You know, that's the way I would be looking at it. But you still really want to make sure that after the speech that you get that clear signal and you get that clear method of entering. You don't want to change your approach just because you've got a news event coming out, because it might be a damp squib. That's the other thing about it. You know, we get really excited about these things. Like, this is going to be our thing. I'm saying it's the driver with complete assumption. I don't know whether it'll be the driver, but I'm assuming that probably will be the case. However, it might be the driver, and then the driver might actually end up being something which doesn't tell us anything, because Jerome Powell is very, very good at that. Back on the FTSE, okay. Back on the FTSE. Ah, cool, okay. Right, then let's see if we've got, I'm just going to get rid of this. Stupid, didn't mean to do that. Okay. Yeah, the FTSE looks tepid. The FTSE looks really tepid. Now, the reason I'm not that keen now on the FTSE is because it's 8:45, and we've effectively had 45 minutes to come back here and give us a trend. Now we do change. So now we're in a different phase again, you know. And this is the thing about how my trading approach, I should say, evolves through the day. My first port of call is, can I enter straight away off the bat? Can I get into a trade? The answer this morning was no. It just went without me. Now the second one is, can I get a little pullback, a little tick to the upside after it's gone where I want to get to the downside? And unfortunately, it's taken too long for it to do that. So the hunt for volatility is imperative. It really is. You know, we have to have volatility to get the market to move. Now, the volatility, from what I can see, and I can see it just by the way that these numbers are flashing, is now low. You know, the volatility is just dipping too low for me. So now what I'm looking for is best possible price. So my approach is changing really all the time because the time's changed. So best possible price, because now what I'm looking for is the Jerome Powell trade, as we just talked about, Paul. And my Jerome Powell trade means sell at the sell zone in a range and buy at the buy zone in a range. This would have been a buy zone. I wouldn't have been too keen on buying that, but there was an opportunity. The sell zone's now up here. So not keen really with the FTSE. Not that it won't necessarily come down, but I just don't like it. I don't see the opportunity here at all. It's just not enough room to be safe. So what I now want to see is the FTSE push up here and wait for the bar that suggests that I should get in. What's our 5 saying? So the 5 is giving us that bar. The 5 is pushing down, but there's our support here, just there. And there's a chance really we should be looking at the long rather than the short here right now. Not high enough to look for the short. And as I say, the 5 has now created this. More of a chance this goes long than short. Would I want to go long? Do I want to go long? Not really. Not with the pound actually getting a little bit of a boost. So just not clear. And I was thinking about it the other day, you know, from Monday when we were trading Monday, and I didn't have a particularly good day on Monday. And if I'm honest, I've been sweeping up my mess for up until now. I just managed to kind of clear up the mess that I made for myself on Monday. And I was thinking about it, and we are in that kind of middle 2-week tricky period with the FTSE where clarity just becomes. It just starts to drop off a little bit. And I start to say to myself, okay, I could take trades here. You know, I could take this long and look to get up to that trend line, but I don't need to. And I'm probably happier waiting for that kind of clearer signal to come, which does come. You know, there's just no rush for it to arrive. So I'm gonna pass on this one and see if I can get the Jerome Powell speech giving me something. You know, maybe sort of like listening to bits and pieces later. Now, of course, we're also in earnings season, and that puts up some pressure on the market too. So my overall look Yeah, that's the thing to do, Paul. That's the thing to do. Try and stay disciplined on your setups, you know, because you know, we can pick out what what we think the market will do because of a specific environment, but we don't really have the safety of that. We don't really have the safety aspect of that unless we got our setups that we know and we trust and we you know we've been able to rely on before. So yeah, wait for the setups. And my advice to you is, if they're not there, just don't trade it. You know, we don't need to be drawn into these markets, and you know, it's almost like that's what they want you to do. Of course, that's not the way it is, but that's sometimes the way it feels. That's what the market wants you to do. It wants you to trade all the time. That's definitely what the brokers want you to do. But we don't have to do that. We don't have to get drawn in unless our account isn't balanced for the month. If our account isn't balanced for the month, but if we don't have to take these slightly riskier trades, then let's avoid them until we get that extra bit of clarity. And this is where trading does have to become, to a degree, it's got to become intuitive. You know, we've got to try and get that intuitive aspect into trading. Have I got a really unstable internet here, guys? I think I have. What am I getting? Can you just can you guys send me a message just to let me know what the internet's like? I'm just getting a little message here that this internet's a bit unstable. There we go. How's that? Can you guys hear me okay? I know I've just lost my screen. It's okay now. Thanks, Angel. Thank you. Yeah, I just got a message that that the internet is weak. I've just switched over to a different network. Yeah. Anyway, I hope you guys got that, and it's effectively the message of recognizing, understanding, and appreciating that the market it really is generous. It's a very generous place to be, the market. It does offer you opportunities all the time, but that all the time is kind of you know, we've got to understand what that really means. It doesn't mean in every second of every day. I mean, to a degree, it does, but what it means is that if there's no trade today because we're not getting clarity, we don't have to force our way in. Unless we're, as I say, unless we're trying to balance up our account, you know, unless we have to take that bit more risk to try and balance up the account. But what we're really trying to do is go, let's take the really clean opportunities and let's make an assumption of what the market is today. Because if it's not conducive for us to make money, which I don't think it is today, this looks frustrating to me. This looks like a really frustrating type of market. I'm seeing mixed signals all over the place. You know, we've got CPI data that's just been released. We've got Jerome Powell, which is really important. You know, it's not like we've got nothing coming. We've got the central bank chairman out later on to discuss what the US is going to do about this inflation. It's really important, and the whole market is watching Jerome Powell. And there'll be positions council, there'll be positions, you know, some people on one side of the fence, some people on the other side of the fence. What we really want is a kind of an imbalance in the boat. And we can't really get that until later on. Yes, we can ease into a position, which is fine, but it'd be better to get that imbalance of the boat. And we know that they happen. So we don't have to dive in, is my point. And I'm quite happy to wait for clarity. This is for you guys, just to be confident there will be clarity. You will have a point of clarity, and they're the ones we want to get. You know, we don't have to try and get our percentage in every day. It might be that we get the whole percentage for the month in 1 day or 2 days. So let's keep our powder dry if we can. But this is where you, as I say, the intuition has to start to come into your trading, and you have to kind of get to the point where the signals and the messaging from the indicators are layered on top of your belief of sentiment. You know, and as I say, my belief of sentiment is this is probably going higher. You know, if I was down for the month, I'd be trading this. I'll be going long. I'll be sort of like thinking, right, I've got to you know, try and balance up the account a bit. I'm taking this trade long, but because I don't, there's not enough clarity for me to say that this is a really nice trade to get into on the long side. So I'm going to avoid it. And also, I know that there's going to be a much cleaner opportunity. I know I'll see exactly this same chart pattern, but this same chart pattern will be on a day that either Jerome Powell hasn't spoken, or isn't speaking, or he's just spoken. So that's the thing here. Right. Yes, Lexi, exactly. And that's the point, isn't it? When we kind of go into that trade, we almost don't need to, and we give the money back that we've made. Itchy fingers. I got it. I'm with you. I feel that. I feel the itchy fingers. Do you know, one of the reasons I can't be itchy fingers today is that I've got no Jeff, and it doesn't look like I've got Ainsley either. So because I've got no Jeff and Ainsley, and it's just me today, then I can't do two things at once. I can't talk to you guys and try and focus on trading. And I don't want to, if I'm honest. You know, I want absolute quiet when I'm trying to make a decision on the market. And then, what usually happens is Jeff starts the show. I can make a decision nice and early, and then after I've made my decision, then I can bring it to you guys. But trying to make it while talking to you guys is a challenge. So I'm not that bothered about trying to make money today. Quite happy just to let the thing evolve, and when the show's finished, then I'll do some more research. Now, on that, actually, let's finally talk about Bitcoin and the cryptocurrencies, because Shukri said something I thought was really interesting the other day. Yeah, no problem. Okay, let me share this screen. Okay, so cryptocurrencies, let's have a look. Well, say cryptocurrencies. I'm only going to look at Bitcoin and Ethereum. Let's have a look. So what is going on with the crypto space? Now, the fascinating thing that Shukri said last week, which I thought, sorry, on Monday, which I thought was really poignant, or was it Tuesday? It's Tuesday. Yesterday. What he said was he was concerned because we've got this grayscale issue with Bitcoin, where there is a chance that there's going to be a whole bunch of Bitcoin flooding back onto the market. And he also said that without a market correction, Bitcoin could have another situation where it comes lower after the first one. So it could come low because of the grayscale thing, and it could come lower again after that because the markets are potentially going to weaken. Now, the other thing we need to understand is how Jerome Powell's rhetoric and tone affects the stock market. And the way that he's going to affect the stock market is by possibly talking about raising interest rates and the stock market getting jittery enough to say the profits that we thought we were going to get are no longer there. So the S&P is now overpriced. It's overvalued. The FTSE's going to follow the S&P. The FTSE, as I say, in actual fact, is not overvalued, and it wouldn't matter what they did to interest rates as long as they don't go crazy. It wouldn't matter what they did to interest rates. The FTSE would not be overvalued. The FTSE is one of the indices globally which is not in a point that you'd be too concerned about getting some value out of buying it. So it's a bit trickier. But certainly Jerome Powell might say something to drag the S&P and the NASDAQ lower. And if that was to happen, Bitcoin is probably going to come down with it. I don't see how, and this is some of the issue when people started talking about Bitcoin being digital gold. The evidence hasn't pointed to that over the last few weeks, because while we've seen inflation creeping higher, gold has held its ground. Bitcoin is sinking. So I think there's the correlation might be a little bit tenuous. But there probably is a correlation with risk on assets, and the risk on assets are the NASDAQ specifically and the S&P. So if the S&P and NASDAQ start to ease to the downside and grayscale causes Bitcoin a problem, then Bitcoin could get a bit of an almighty crash. Now that crash, in my opinion, is probably around about the 20,000 mark. And if you look on a weekly level, then there's lots of people that have drawn lots of different indicators and levels all over the cryptocurrency space, and we could all do that. We can all find the price points that we really like. But I'm just going to use the simple philosophy that I always do to start with, and that is draw a trend line and draw where it has not yet tested. Okay, so now where it's not yet tested is around about 12,000. There's the trend line there. Could I make an argument for that with a trend line? Maybe. Gap there by the looks of things as well. Now this one here, bit of resistance here. It didn't come that low, but it might be close enough. This bar here maybe was close enough to say that there has been enough of a test of something to justify saying that this is the level that has not yet been tested. Okay, it's maybe a bit tenuous. It could still be there, but let's give it the benefit of the doubt. And the reason that I'm saying that there was not even an attempt is that at least we got some selling here before we pop up. Now, from this point, we have not had any selling. It's just gone up, 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 up. So untested. Now that level is 19,500. So that would suggest to me that 19,500 is a great time to be looking for the long in Bitcoin. Now I look at it and say, okay, well, how does 19,500 relate to 3,200? It's around about 40%. Let me see if I can do that maths properly. 32 would be 10, so 64. 12, 8 is 40. Maybe it was about 45 or something like that. Somewhere around about that level. Anyway, going to be about yeah, it's going to be that looks like a pretty big dip. So now I'm looking at Ethereum and doing the same thing. I'm thinking, okay, somewhere between 40 and 50% drop. Then if that's where Bitcoin's coming to, and Ethereum's been tracking it pretty closely, then I'd make the same assumption with Ethereum. Ethereum currently sits around about the 1900 mark, so I'm probably looking around about let's say 1000 with Ethereum. Nice round number to make it easier. Doing the same thing. Now, where did it not yet test? This gap here, probably. Could be a little bit higher. Could be there. Yeah, I think the gap looks most likely. And that would also bring us down to around about this area here, which is around about the 936. So that's what I'd be looking at. You know, that to me looks like the most attractive point to get in to these markets. So it's not so much that we will be using Bitcoin and Ethereum as a barometer, but what I'll be looking for is a collapse down with the Nasdaq and the S&P, and it bring the crypto space down around about 40%. Yeah, alts will probably dip as well, Sweet. And this is where we have to kind of, like have our, make sure that we've got our view of what we're holding really tight, because markets do this, right? I mean, the crypto market's a bit different, but markets do come back. So the question we need to ask ourselves really is are we comfortable with the crypto space? Because if we're comfortable with the crypto space, who cares how much it comes back, really? You know, it's something that we can put in the back pocket and just ignore it, as long as we're not over leveraged and we haven't kind of like put our house on it. And that has been my slight issue. There's been an absolute feeding frenzy, and it still seems to be going on. That there's this feeding frenzy with crypto, that everybody's like trying to be a crypto millionaire. Well, you know, hold the bus a little bit. You know, it's not necessary to kind of over risk and over leverage yourself like that, and get romanced by what other people are doing, because those other people are you know, they've managed to kind of build themselves up professionally in their own way. So we don't need to worry about that. We just need to worry about what's our own thing doing, what's our own account doing, and what we're going to do with that. So we need to ask ourselves how much we believe in the crypto space. And if we believe in it, it doesn't really matter what happens to the other things. If we don't believe in it, then we should be taking profit, you know, and waiting for it to prove itself again. If we're not sure, we take profit and move into some of the stable coins and allow it to prove itself again. But that's what I'm looking at with the crypto space. I'm not saying that that's absolutely what's going to happen, but I wouldn't be surprised to see the crypto space dip another 40%. That's the number that I'd be comfortable saying that I'd still be a buyer. In actual fact, I'd quite like to be a buyer down there if it came down there. But yeah, altcoins will probably suffer, I would have thought. Because it's in, you know, it's just a phase that goes on, isn't it? But what we don't want to do is kind of get caught up in all the frenzy. You know, I just don't think it's necessary to get caught up in the frenzy of the crypto space. What we want to do, and I mean, I've really said this from the start. What we want is it in our portfolio, but recognise there are other things that we should have in there just to protect what we've got. You know, we're not going to make it all about cryptos all of a sudden. Let's have a little bit of balance, because we know historically that works. You know, to have the balance, and we know that there are. You know, Shukri is a genius. He can make 10 grand out of a pound. I think, you know, he's a very, very clever man. But it takes a long time to kind of get, you know, and formulate the kind of the mindset that Shukri has, and we shouldn't already be thinking that we can do the same thing. Certainly, he can help us get close, but in a period like this, you know, when the market is proving to be difficult, we shouldn't be looking to be making a whole bunch of money. We should be just going, let's just protect ourselves a little bit now, and you know, the run to the upside is done for right now. And let's wait for the next one. And the way we'll wait for the next one is by not participating or going into altcoins. I mean, Shukri said that himself the other day, and I think it was very good advice. Anyway, it looks like it was just me today, and I apologize for having to ramble longer than is probably bearable, but I didn't really have a choice. I do thank you guys for getting involved in the show. And if there are any other comments before we leave, or any questions before we leave, then I am more than happy to take them as always. But if not, then I will wrap it up for the day. And you missed a large part. Oh yeah, we missed you too, Lewis. But basically, the offshoot, mate, is that with the central bank out, and I probably could have said this in 5 minutes, which I will do now. Central bank is out at 5 o'clock this evening, UK time, and with that in mind, we are probably in a bit of a range, and I'm taking trades probably before that is going to be maybe a bit tricky. So maybe sit on your hands until either 5 o'clock today UK, or until possibly even waiting until tomorrow before you get into your trades. That's the offshoot of it. What happened here? Yeah, see, it's still in that area that still looks like a long to me, but not a tradable long by any stretch. I won't be trading that, that's for sure. Anyway, I will shoot off, and Jeff will be back with us tomorrow, so it'll be a bit easier. Yeah, I think that's wise, Lewis. I think that's wise. You know, the thing we've always got to remember is we don't have to hit the ball. We don't have to hit the skin off the ball with this stuff. And I relate this to cryptocurrencies and everything. We don't have to hit the skin off the ball. We've just got to take a bite, because the more bites we take, the more the bigger we become, and the bigger we become, the bigger the bites we take. You know, it's kind of it starts to kind of perpetuate like that. So we don't have to kind of like take the biggest, fattest bite in one hit. We can go, nice, now I'm feeling stronger, taking a bigger and bigger and bigger. This is compounding, is really what I'm talking about. So I think taking some money off the show, off the table is wise, and waiting for a decent opportunity to take some more off. Right. Anyway, I'm going to wrap it up, and I'm going to give Angel the signal that Jeff always gives her. I will see you guys tomorrow. Thanks so much for participating. Thanks, Angel, for looking after me. And I will see you in the morning, same trade time, same trade channel.